and welcome to the Small Business Tax Savings Podcast, powered by JETRO and Associates. Get ready for another action-packed episode from our team that will help you save time, taxes, and keep more money in your pocket.
Hey, listeners, and thank you for tuning in to another episode of the Small Business Tax Savings Podcast. My name is Mike Jesowshek. I'm a CPA and founder over here at JETRO and Associates. And today we're going to continue that discussion of tax-related items that we should consider before the new year. Today's topic is going to be on the S-Corporation Officer Reasonable Compensation. So as you should already know by now, we talk about it all the time, S-Corporation officers must be paid a reasonable salary. This salary must be completed by the end of the year. So if you are an S-Corporation business owner that has not processed a reasonable salary yet, or need to make an increase to reach that reasonable salary amount, it is important that it is completed before December 31st. If you do not take a reasonable salary, the IRS is able to take a portion of your distributions and move them to a salary and then charge back taxes, penalties, fees, etc. on those amounts. So you want to take this very seriously and make sure that you get that reasonable compensation completed before year end to avoid those future charges. Now, you may be saying, but Mike, I didn't even take a distribution this year. If that is the case and no distribution was taken, then no reasonable compensation is required to be taken for that specific year. It is important to note, however, that when a multi-year distribution is eventually made, the reasonable salary should match that distribution time frame. So as an example, if you do not take a distribution for 3 years and then you finally take it in year 4, you would have to also take the salary in year 4 for those prior 3 years that you are now taking the distribution for. Let's imagine that your reasonable salary is $40,000 and you didn't take a distribution for 3 years and therefore did not take a salary. You did not take that $40,000 a year salary. Now, if in year 4, you finally take a distribution for those prior 3 years, you will also now have to take that reasonable salary for those past 3 years. So the salary amount would be $120,000 plus the current year, not just 1 year's worth of salary. So just again, as a recap, for S-Corporation officers, it is very important to make sure that your reasonable compensation is made before year end. So if you haven't taken it yet, or you need to run a bonus payroll to get up to that reasonable compensation amount, make sure it's completed before December 31st. Again, thank you guys for tuning in, and we'll see you on the next episode.
This has been another episode of the Small Business Tax Savings Podcast from the team at JETRO and Associates. If you have any questions, feel free to email them, tax@jetrotax.com. We have packages for small business owners starting at just $75 a month. If you enjoyed our podcast, please take the time out to give us a 5-star review in iTunes or wherever you listen. This helps us to bring you useful tips to help you grow your small business. Thanks for listening and have a great day.